We're going to start back up. And our next speaker, we're actually going to have a presentation. Before I got into crypto a couple years ago and went full-time crypto, I was an investor in tech companies in Israel. And I still go to Israel, spend 10 days a quarter in Israel. They are killing it in crypto. And a few trips ago, I met this guy, Moshe Joshua, from Black Moon. And what they were doing, I thought was really innovative. And so I'm excited to have Anna Cox here, who's in from Cyprus. And she's going to give us a presentation for a little bit, and then we're going to sit down and have a talk. And I think you're going to find what Black Moon is doing super interesting. Anna?
Hi guys. Lou, thank you for the introduction. It's great to be a part of such a wonderful event. As Lou mentioned, my name is Anna, and I'm here to talk about the importance of liquidity for security token offerings. You know, throughout my career, I was fortunate enough to witness every stage of an equity issuance cycle. When I started off at Lehman Brothers, I was a part of the equity desk, and we focused on IPOs, and I watched the road shows for various issuers. Found it quite an interesting process, but extremely complicated. When I moved on to a Russian institutional broker-dealer, Troika Dialog, I've watched the emerging market explode, as I was also a part of the equity sales desk there in the emerging markets. When I was at Goldman, we did equity swaps, which allowed access to equity performance for institutions that could not invest directly into a particular type of equities. And now,
Anna, I'm sorry, for videos, we're on video. If you get on stage, my fault, because I said,
okay.
I was wrong.
All right, so I do get to be on stage. Cool. And now I am watching an amazing unfolding of security token offerings, which I believe are going to create the next big wave in the equity markets. We've already seen the blockchain revolutionize the way equity capital can be raised, because it allows smaller companies gain access to capital and to new investors. And seemingly, blockchain also improves the liquidity by providing transparency and transferability of investment instruments. However, what we will see today, hopefully I'll be able to demonstrate that blockchain and technology in and of itself is not a provider of liquidity. The idea of tokenization is not new. It goes back thousands of years to ancient China, Byzantine, and Roman empires, where we've seen monarchs issue coins with their likeness imprinted on them to signify their wealth and power, while providing transferability to a unit of wealth. As the sources of precious metals for tokens have diminished, the unit of wealth was first moved to a paper form, whether in form of a currency or a certificate, and then to a more abstract digital form. The digital ownership of an asset made the idea a bit more shaky and abstract to an investor, all until blockchain came along. Besides the proven proof of ownership, blockchain brings another plethora of advantages to all participants in the market, starting with issuers, depositories, regulators, and of course investors, because blockchain simplifies the process of investing. However, there is one key element that is missed by blockchain, and this is very frequently overlooked by all participants, investors and issuers alike. Technology, and blockchain specifically, does not create liquidity. In order for liquidity to exist, we need to understand that there need to be other participants in the market besides investors. Liquidity defines your risk as an investor. Without it, you cannot properly assess the value of your investment. If you think about what you're buying when you're buying an STO, you're essentially buying a promissory note from an issuer that is only redeemable by the issuer. And unless this issuer steps into the process and becomes responsible for the creation of liquidity, you as an investor continue to bear the risk of a one-way investment. So what we are trying to achieve is demonstrate that the issuers need to step into this process and take the responsibility for creation of liquidity for their investors. The greater the market depth, the more liquid your investment is, the lower is your risk as an individual investor. So you can see, basically, if there is very little liquidity in your investment instrument, whether or not you list it on an exchange, whether or not they're market makers, unless there is liquidity in the instrument, the investor is always the one who is reaping the damage of poor planning on behalf of the issuer. If we look at the traditional financial markets, which obviously have a much broader history and much more depth than the emerging crypto markets, we can split the financial products pie into three types of assets. And these assets gain their value, and they have liquidity mechanisms that are quite different from each other depending on the product type. The first product type we can consider are those that are expiring and they gain their value as a decay of the function of time. These are your options, futures, and bonds. The second product type are redeemable products such as hedge fund, mutual fund shares, and ETFs. And the third product type are equities and currencies. They neither expire nor are they redeemable. When we think about listed equities, the ones that have been on the market for a while, of course there are mechanisms that allow us to approximate the price or valuation of such an equity based on a number of ratios. This is what the analysts are typically doing for existing stocks. But when we talk about new issues of equities, it's very difficult to estimate what the exact valuation of this equity is. Basically, a new issue is at the mercy of the market. It's whatever the investors perceive it to be, whatever the market players perceive it to be. So STOs are in the same position as newly issued stocks. A single trade or a single investor can pretty much drive the price of such a stock down with a single trade. This is called perception valuation. This is what happens when there is no liquidity in the instrument. A single opinion can influence the price of your STO and wipe out a significant portion of the price and the market cap for your issue without liquidity. This is why the diverse set of opinions or diverse set of price creation is so important for any equity issuance, including STOs. So, now that we have established the importance of liquidity for STO issues, let's see how we can achieve it. Historically, the issue of liquidity and price discovery has been sidestepped by aggregation of assets into baskets or tradable indices such as ETFs. One may think that this is because of diversification, and the appeal of ETFs lies in the diversification of opportunities for investors. But in fact, the reason for this is liquidity. ETFs in general are more liquid than individual equity stocks. If you take top 10 stocks traded on the New York Stock Exchange, 7 of them are ETFs. And there is a reason for that. ETFs outweigh their corporate equity counterparts 3-to-1 in terms of volume trading. So, aggregation is a good way to overcome the issue of liquidity for your security token offering. How do we achieve that? I am here representing Black Moon, which is an operational, innovative, blockchain-based platform for investment instruments. And what we are trying to create is tradable indices, we call them exchange-traded indices, for STOs. Our idea is not only to help investors gain access to innovative investment instruments, but also assist issuers with the key task that they have at hand, which is creation of liquidity in their instrument. Because once again, without liquidity, you cannot have price stability in your instrument. You're going to be at the mercy of traders and arbitrageurs that are going to eventually drive the price down. So exchange-traded indices are products that we're creating in partnership with various exchanges that are packaging STOs or ICOs into a product that is redeemable, calculable, and transparent, and liquid. We at Black Moon not only are assisting issuers, we're also approaching the tokenization process from an investor's perspective. Instead of just relying on bid and asks in the market, we are creating what's called a price request mechanism. Different participants in the market, traders, investors, and speculators, are requesting a price from Black Moon. Black Moon buys the underlying assets on its balance sheet, and thus offers, by having these underlying assets on its balance sheet, it offers the instant ability to redeem these assets. Think about it. You have something that is completely liquid, instantly redeemable, and it's traded more than an individual STO. The product is appealing not only for investors and issuers, it also appeals to arbitrageurs and traders and speculators. We all understand that market has different types of participants, and speculators, even though the word may not be very appealing to all of you, but speculators are a necessary part of a well-functioning market mechanism. Because speculators, by trying to find arbitrage opportunities, buying underlying assets and then hedging with an exchange-traded index, they're creating additional bid and asks in the system that otherwise would not exist. These bid and asks are exactly what are providing more liquidity to your instrument. Of course, we've now spoken about liquidity. We are already testing the mechanism for packaged redeemable products via our own crypto strategies. Before we even decided to roll out exchange-traded indices as a product, we wanted to make sure the redemption mechanism we're offering is well-functioning. So we've rolled out Black Moon's proprietary crypto strategies. Essentially what these products are, they're packaged portfolios of crypto assets based on proprietary design strategy, and they're traded via an algorithm. So these portfolios are automated, transparent, very secure, and most importantly, this is me speaking as a compliance officer, they're compliant with all US regulation. They're offered via Reg D exemption. And of course, we do a full cycle of investor onboarding for both for issuers. We're doing the KYC and AML on the investors. We're doing the legal analysis and the project analysis for the issuer. We're doing investor reporting. We're doing instant redemption. We're doing reconciliations. This is a one-stop shop for you as an issuer, or for you as an exchange to partner up with. And again, we've been live and operational since March 2018. There are many platforms that are offering STO listings and STO trading, but there are not many platforms that are offering instant redemption and liquidity to your instruments. So I invite you to stop by our booth 208 to learn more about our product. And I hope this presentation has been useful for you guys. Thank you for your attention.
Okay. Thanks, Anna. You want to take a seat and
Sure.
go over some questions? Great presentation. You started talking about, that one of the things that I guess the algorithm does is the initialized price discovery.
Yes.
Can you help us understand how that works?
Okay, the price discovery happens once you create additional bid and asks in the instrument. Do you want to dive into the ETX discussion?
Yeah, well, do you want to go, so on the digital strategy side, so.
Okay.
Go back a little bit. Does it work?
Sorry.
Yeah, to that side, no, one forward there. So
This one.
On the right, so those are the different strategies.
On the right-hand side is actually a composition of one strategy.
Oh, that's just one strategy, okay.
Yes, I'm very happy that you actually asked us about this. So this is a product that's mainly done for the benefit of the investors, the crypto strategies. There are a lot of crypto enthusiasts that are gathering here, but all of us are human beings. We sleep, we take breaks, whereas the crypto market functions 24/7. So what we're trying to to achieve is we're trying to build most beneficial strategies that would allow investors to take a break and get a full diversification of their crypto holdings with one security token. What this means is by purchasing one token, you can gain access to top 20 coins with market capitalization at any given point in time, one day most volatile tokens from a number of exchanges. Our data science team is evaluating the market. They have built the strategies, and execution happens via algorithms. So this is what these strategies are about.
Can you quickly describe what that strategy represents?
Guys, this is the one day most volatile, if I'm not mistaken. Yes, this is the strategy that contains all coins with the highest daily volatility. And as you can see from the colors, you can't see the exact composition. Actually, if you go on our platform and you select this asset, by scrolling along, you would be able to see the exact coin composition on each day. And it's rebalanced via an algorithm on a daily basis.
And so does being part of the strategy decrease the volatility? Theoretically, right. That's what you said during your talk.
It increases liquidity. So by definition, with increased liquidity, you would decrease the volatility. This is a strategy that's based on the coins.
Right.
When we're talking about creation of indices, it would be slightly different from a strategy because this is, again, rebalanced on a daily basis. Once we create an ETX, this is not going to be rebalanced on a daily basis. It would be a bit more stable.
And you talked about arbitrageurs coming in, and creating again more liquidity. Mm-hmm. Do the arbitrageurs just naturally come in because they're arbitrage opportunities, or do you actually, do you have to go out and get them and tell them about this and help them understand?
Once the product gains the momentum with market makers stepping in, arbitrageurs will definitely see the opportunity for this. We are inviting market participants, and I do believe that all market participants are important in the price discovery. Again, you cannot survive on investors alone because they buy and hold. You need speculators and you need arbitrageurs to create a true price valuation for your product.
And then when is it going to be, or is it already now, available for other people to come and create different strategies?
Not yet. At the moment, we have proprietary crypto strategies on our platform. We are considering the idea of other people creating their portfolios, and most certainly, once we partner up with issuers and exchanges, we would be open to ideas of their strategies. This is what partnerships are all about.
And which of the strategies are you seeing that are attracting the most interest from investors?
The interesting thing is, at the moment, all our products are available for purchase with crypto assets. So naturally, with crypto being very, very volatile instruments, we are seeing that the most popular strategy is the one with the most volatility. This was not the idea. We're trying to provide diversification opportunity, but in the crypto world, more volatility means more attraction for investors. We are just about to add traditional methods of payment to the platform, so we would be inviting fiat investors to also come in and invest into these strategies. And for those, I believe the more balanced strategies, maybe with a top market cap, would be more attractive.
And so, of the strategies that you have, which ones do you think are going to be the highest volume strategies down the road?
I do believe that it's going to be the top market cap, again, because I do believe that investors are rational in their investment decisions, and they are looking for more liquidity and for more price stability. So I believe those are going to be more appealing to them.
What have you learned from how the ETF market has evolved over time? I mean, obviously it's become so unbelievably massive. It seems to make sense that it's going to become massive in crypto as well. Obviously, it's just starting out. But what lessons did you learn from that? ETFs have been around for a long time.
Well, again, what we have learned from ETFs is that, first of all, they are the driving mechanism behind liquidity. Secondly, in order for this mechanism to function, there is a standardization that needs to be involved. So it's standardization in the settlement, it's standardization in the issuance. Now we have a very vast number of exchanges that are focusing on different crypto assets, and it seems that everybody is running along their own rules, even though we're all operating on the same blockchain. So I do see a shift towards standardization, and I do believe that the products are going to become more liquid once they're packaged and they can be moved across different exchanges easily. So hopefully this is going to be the trend.
And this is just a little off because and we're going to be having future discussions and in some of the future panels today on liquidity. But what else are you seeing in the landscape in terms of new innovation around driving liquidity for the crypto ecosystem?
That's a very good question, actually.
So are you familiar with Bancor as an example?
Yes. Again, the drivers for the liquidity is going to be open and transparent participation for for different market players. And it may sound strange to some of you guys. I do believe that another driver is a uniformity across regulators. Because, again, the liquidity at the moment is very limited because some of the regulators are just afraid of the entire space altogether. Some of them are restrictive, and they're trying to sort of fit the industry into a regulatory straitjacket. Whereas the other regulators are issuing guidelines that are suggestive but not prohibitive and not prescriptive. And we're kind of all over the place in this area. So in order for true liquidity in the market to exist, the regulators must understand that this space is here to stay. The blockchain industry is not going to go anywhere. It's going to grow, it's going to develop, and it's the natural natural evolution of the financial world.
So, talking about obviously the importance of regulations and regulators to the security token world. Can you talk about, Black Moon and its jurisdiction?
Sure. Black Moon is a European company. We currently are getting a license in Malta. Malta, as you may know, even though it's a tiny island, it's quite advanced in terms of regulating the virtual financial assets. And the regulator is quite proactive in a dialogue with the market participants to ensure that they're not stopping the business development, but rather they're setting the framework for this business to function efficiently. So before selecting Malta, I've actually done an analysis of 9 European jurisdictions, EU and non-EU also, but all in the European area. And Malta was the most appealing one, primarily because of the regulator's approach. So it may look like a very small jurisdiction from a geographical standpoint, but the progress that it has made in the crypto space is tremendous. And this is why giant exchanges like Binance are moving there, precisely because there is an opportunity. And it's very important for the regulators throughout the world to realize that, if you fall asleep and you don't catch the train, you're just going to stay behind. It's not possible to regulate a new innovative financial industry with security laws that are written in the beginning of last century. It's not possible. There needs to be an evolution.
And how would you describe their approach? You said you moved to Malta because of their approach.
Yes. Basically, the approach is the regulator is putting the pressure not on the companies themselves, because they realize that a lot of these companies are created by guys who have a technical mindset. They're not familiar with the regulation, they don't understand a lot of terminology, they want to bring a financial instrument that is innovative into the world. So what the regulator does, the pressure is actually on what are called the virtual financial agents. So these are your lawyers, these are your consulting firms, these are the introducers that are bringing the companies to the regulator to get licensed. So the regulator has actually created an exam for them. They have to pass a very, very rigorous regulatory exam before they can become an agent, and the license applications can only be submitted through an agent. So the pressure is on the intermediary. They cannot let the regulator down. This is sort of a security blanket that the MFSA has, in terms of understanding the type of business that's coming to them. And this is also a very good mechanism for weeding out bad players in the market. If your agent that's bringing a license application does not understand the business of a person that's applying for a license, then certainly it's probably not a good idea to get this license.
And Malta, there's going to be a big blockchain summit, I guess, in
Yes.
Malta next month?
It's just coming up next week, actually.
Oh, next week. Okay,
Yeah.
that is coming up fast.
Yeah.
And it's going to be huge, right? I mean, it's crazy.
Something like 7,500 people, from what I heard.
Yeah, do they even have that many rooms in the
I don't know. I don't know if they have so many hotel rooms, but it definitely was very crowded at the last summit. But this again shows you that the proactive approach that the regulator took does bring the business.
And who's putting on the conference? Is it the country itself? Is it the government or?
The government, it was the government that created the legislation. The Maltese Prime Minister, Joseph Muscat, he speaks at every conference. He wants Malta to become the blockchain center of the world. However ambitious this idea may be, but the government is enabling the industry. The government is putting pressure on the banks to start cooperating with these institutions. If the government has published the legislation, all financial market participants need to start evolving and accepting that the idea is there, the legislation is there, and the infrastructure is also going to be there.
Cool. So I'm not going. My partner James Haft is going. I know he's excited about going there and seeing Malta. And do you think it's obviously you're moving there?
Yeah.
Do you think it's going to end up being the blockchain capital of the world? It looked like it was going to be Zug for a while, and when you looked over the 9 countries, did they have? Was it easy, obvious to go to Malta, or was it a tough decision? What country was second or third?
In terms of regulation, and again, the dialogue that we had with the regulator, before we made a decision, we had a preliminary meeting, and having seen such a sharp contrast with Cyprus, it was an easy decision. We considered some other jurisdictions like Switzerland, like Gibraltar, all your typical ones that you would think of. Malta was not an easy decision by any means, again, because there is always an uncertainty. How can such a small nation take such a huge responsibility, and how can it deliver? Does it have the infrastructure? Does it have the people to execute? Does it have the understanding? Will people go there, which is another thing. And again, having read the legislation, having seen the development of it, and having seen the regulator's approach, the regulator at the last conference had 2 stands. The regulator was present at the conference. This again shows you how proactive they are in approaching the industry. So they're not just speaking, they've spent 3 days in a dialogue with market participants, giving advice, guiding the people on the application process. I think this is huge.
Super interesting. So I'll let you get in one last plug for Black Moon.
Okay.
In terms of what is it that the people should remember, and why don't you say where you are downstairs as well again, just so people remember.
Black Moon is an innovative blockchain-based investment platform. Our goal is to create a bridge between fiat and crypto world, and we want to create easy investment opportunities for both issuers and investors. For issuers, we want to offer additional liquidity to your STOs by partnering with you and with the exchanges where you're doing your STOs. If you want to learn more about us, please stop by our booth 208. We're downstairs. And for investors, guys, come and check out our crypto strategies. They're a fantastic product. You can try to replicate it. I don't think you're going to have much luck because they are built with a very, very solid algorithm. All execution happens automatically, and we do think that the architecture for this product is quite neat. Thank you for your time.
Thanks, Anna.